The concepts that we will learn today is about REITs, that is Real Estate Investment Trust, and INVITs, Infrastructure Investment Trust. These are new age investment vehicles, the information for which should be known not only to finance professionals or finance students but also to a layman as an alternative avenue for investments. So let's understand these. Hello everyone, welcome to iExamB. So as I said, the concepts that we will learn today about are REITs and INVITs, that is Real Estate Investment Trust and Infrastructure Investment Trust. So these REITs and INVITs, they are new age investment options that appear to be boon to the new age investors. So India, as we know, is one of the fastest growing emerging economies in the world. And India offers various options for investments to draw the attention of not only the domestic investors but also to the foreign investors. So in order to keep pace with the economies of developed countries and to open its horizons to new age investments, SEBI introduced guidelines for regulations for REITs and INVITs in 2014 as an alternate investment funds. So according to these regulations, INVITs are Infrastructure Investment Trust shall mean the trust registered under such regulations. They are similar to mutual funds that pool money from investors to own and operate operational infrastructure assets. The investments are made in these infrastructure assets and the money is actually obtained from investors in order to make investments in these assets. They offer regular income and long-term capital appreciation, and they can be public listed or they can be privately placed. According to REIT regulations, similarly, they also pool money from investors to own and operate real estate assets. So in this case, the underlying are the real estate assets, and they offer diversification benefits to the investors, and they can only be public listed, unlike INVITs, which can also be privately placed. So as I said, REITs and INVITs are conceptually, they are like mutual funds, and in that funds are raised from investors like institutional investors and retail investors, and which in turn they are invested in infrastructure real estate projects. So the rising emergence of these INVITs and REITs is a welcome development, mainly for the various sectors which are capital intensive in nature, capital thirsty, like infrastructure like roads, highways, ports, railways, power, real estate, commercial real estate, etc. And the basic advantage of these REITs and INVIT is that they offer innovative financial instrument tools, because on the one hand they allow the developers to monetize revenue generating real estate and infrastructure assets. On the other hand, they provide avenues for the investors to make investments in such pool of investments wherein the underlying assets are infrastructure assets and real estate assets without even owning them, but also earn the good income, good returns over and above the conventional financial instruments like term deposits and recurring deposits, etc. So what are the drivers for REITs and INVITs in India? So the government of India had launched this INVIT and REIT to bring in long-term capital into the country and to increase private participation in infrastructure and real estate, because government's national infrastructure infrastructure pipeline, that project which will be there till 2025, and investments of almost 1.4 trillion US dollar is required for the same. And also in the previous budgets we have seen that government is focusing on making investments in capital intensive projects in order to increase the economic growth of the country and to provide various other employment opportunities, right? So even in order to meet the need of these type of projects, government of India had launched and SEBI came up with regulations for the same. and for that private sector participation of around 325 private sector participation in the various years till financial year 25 is required, and an amount of 325 billion US dollar is required as per the estimate of this project. So InvITs, as they are investments in infrastructure asset, they are expected to play a key role, an instrumental role in monetizing the existing projects in sectors, as I said, that roads, highways, renewable energy, airports, because these are the projects, even some brownfield projects wherein these are leased out to private sectors for a specific period of time in order to monetize them, in order to generate revenue for them and maintain them, right? So even these private sectors also need money, so for maintaining those assets they raise money through these InvITs, and then investors can actually subscribe to these InvITs without actually owning those assets. So in that way they can diversify their portfolios. So similarly, infrastructure sector is growing, we have seen, and but then on the other hand, real estate sector is also showing a promising growth, because when the COVID-19 struck, we saw that that leasing of various commercial spaces like offices and other commercial properties, that came down because work from home culture came into being. So that's why there was no need for leasing out such spaces. But despite that, long-term drivers for real estate demand are strong and also likely to withstand any kind of adversities in this sector. So even various listing of various REITs we have seen: Embassy Office Park, Mindspace REIT, Brookfield, that was listed in 2021 and also almost raised 500 million US dollar for that. So these recent REITs have been listed, and they also become attractive investment opportunities even overseas, because they deliver high yields through regular distributions and long-term capital appreciation, right? And real estate, the main advantage of this sector, that it actually bears low correlation with other sectors, because if something happens in other sector, that is not like it doesn't become a part of that domino effect. It does have a very low correlation with other sectors, so in turn it provides a very good source of avenue of our investment, also provide diversification benefits for an investor in their respective portfolios, right? And for InvITs, the investments for the same are being made in infrastructure, very capital intensive infrastructure projects, and for that, definition for infrastructure was taken as per the guidelines of RBI. But now within the ambit of InvIT, even various other various other infrastructures, like various other kind of projects are also coming under the ambit of InvIT. So what is the framework for REIT and InvIT in India? There are several parties that need to be appointed in order to set up an InvIT or a REIT. First is a sponsor. Sponsor is an entity like a body corporate or a company or a limited liability partnership, which can set up an InvIT before giving an application to SEBI for setting up that. And the requirement for that sponsor's net worth should be 100 crores. So if more than one sponsor is there, then collective basis it should be 100 crores, and for like individual it should not be less than 20 crores if more than one sponsor is there. And trustee is a person who holds assets of REIT or InvIT in trust for the benefit of unit holders, people who are subscribing to this InvITs and REITs, the unit holders, investors, and as per the SEBI regulations. And trustee should be registered with the SEBI debenture trustee guidelines, debenture trustee regulations 1998, and should not be an associate of a sponsor. An investment manager also the the entity like company, limited liability partnership or a body corporate, manages the assets of REIT and InvIT and also undertake various activities of it. Basically it supervises assets and also guarantees the activities of InvIT. And project manager basically in case of InvITs only, and this project manager is responsible for execution of projects and also the public-private partnership projects with respect to the agreements that performance need to be taken care of by this project manager. So what are the conditions for formation and registration? So REIT and InvIT is set up as a trust settled by sponsor under the Indian Trust Act 1882 and the trust deed registered in India under the provisions of Registration Act 1908. And the basic primary objective of trust deed, it should be undertaking activity of REIT and InvIT as prescribed under the SEBI regulations. And the persons have been designated as the person who are actually mandatorily they need to be appointed before setting up a trust. They are like sponsors, investment manager, trustee and project manager in case of REIT, in case of InvIT, and all these should be separate legal entities. And for distribution, like when the unit holders subscribe to these InvITs and REITs, like in case of companies, when shareholders make investments in companies, they get dividend. But in this case, net distributable cash flow, which is on the similar lines of dividend, that is paid, and at least 90% of net distributable cash flow of REIT and InvIT shall be distributed to the unit holders. So this is an advantage which is given in order to draw the attention of investors. And also distributions are declared and made by the investment manager not less than once in every 6 months in case of publicly offered REIT and InvIT, and for privately placed InvITs this should be once in a year. Okay. And also the sale proceeds from an asset, if one of the asset, because it's a accumulation of various assets the InvIT is formed on. So when one asset is sold off then sale proceeds from an asset if it is not reinvested in any other asset within 1 year. Within 1 year, if the sale proceed of one asset is not reinvested in another asset, that also should part of net distributable cash flow. So SEBI has shown a lot of interest in making various amendments in case of InvITs and REITs so as to make them more accessible to investors and provide more depth in this market and provide more liquidity in the market. So various key changes have been in the last year. So in July 21 last year, SEBI reduced the minimum applicable values of REIT and InvIT and revised trading lot to 1 unit, with a view to making more attractive for retail investors, because retail investors were always they were complaining that it is like not much accessible to them. So that's why various decisions were taken in this regard. And minimum application value for retail investors of REIT and InvIT was reduced by SEBI to the range of 10,000, 15,000 from the existing 50,000 for REIT and 1 lakh for InvITs. And also the time taken for REITs, for public listed REITs, because they can only be listed, so the time taken has been reduced for allotment and listing after the closure of issue to 6 working days as against the existing 12 working days. So in order to ease out the whole process. Or very recently in September 2022, SEBI has come up with the guideline that REIT and InvITs can also issue commercial papers subject to various approvals and guidelines of RBI and SEBI, and also meeting some requirements. So these key changes have come into force by SEBI. So for REITs and InvITs, that's it. So prepare 50% faster with iExamB. Please subscribe to the channel and don't forget to press the bell icon. And we will come up with various other interesting concepts again. All the best for your preparations. Thank you.